let me, okay. Setting up your meeting.
Looks like we are live.
Yep.
We are live. Derrick Evans here. Jay Lee in the house as well. Trying to tell you, a lot of people have opinions about what's going on in the marketplace. I know I've got one. But the question is, Jay, what does the data show? What is actual information that is irrefutable tell us about what's happening in the real estate market? That's what we're going to go over today.
Well, so now I just need a little circle eyepiece that I could take off. Mad science is here today. So the data, man, the data shows something completely different than what everyone else is talking about.
Okay.
So many people are saying, oh, the market's slowing down, the market's doing this, that we're going to go into a recession, and, you know, all this other stuff. The data shows something completely different, and I'm going to share it with you today. So
all right.
let's do a real quick little share screen here. 1 second. Why is that not? Why did that just do that? Oh, hold on. That's why. Boom.
We're figuring Zoom out here. It's a new era.
Here we go. Sharing my screen. All right. I hope you guys can see this.
Boom.
So,
there it is.
WTF, right? 2020 March in review. So we don't have all the data from April just yet. And we just wanted to go over what we have from March. Go from March of 19 to March of now, and you know, that just passed, and cover what the not predictions, but what the data shows is going to happen.
Okay.
All right.
Fair.
So, like, as you can see, that's 2020, like goofy as hell, right? Okay, right here. This is listings taken. All right. 2018, 2019, and 2020.
Now, this is San Diego, right? This is
at San Diego.
San Diego.
San Diego.
Okay.
Right. So blue is 2018, yellow is 2019, and red is 2020. As you can see, we have much less listings throughout almost all the price ranges, right? So if you're looking at a home between 400 and 500,000, this year we're at 1,452 listings. Last year we were at 1,974.
Wow.
And we were already in a seller's market last year. Wow. Right. So what is that telling you now? Now there's less houses on the market and more competition. With low rates, what does that do? Drive prices up.
And this is year over year data, right? So it's measuring the same point this year as we were at last year and the year before.
Correct. So if you look at the very bottom here, under 200,000, 201 to 300. So it shows you the exact amount of listings we have year per year. And you can see the data. The data is telling you we have less. So we had, you know, less in 2018 and 2019. So everything looked good in 2019. And then COVID hit us in 2020 and everything plummeted, right? As far as how many listings we're taking. From March to March, we're short over 600 listings month to month, right? It's insane. So
that is a lot.
Yeah. So well, let's look at this. A 3-year trend sold by price.
So let's establish the point from that first set of data there is that we have tremendously less listings.
Tremendously. So for a buyer that's coming in and making an offer on a home, having the right agent to get you that deal, for instance, a deal we just put in, the two of us, right? I won't say the person's name. They might be watching. But we had to go up against 30 other offers, and 2 other offers from my own team were bidding on the same house, and I didn't even know it. Right. And, you know, we won because we came in strong enough, because I did the research. I knew what I needed to do. Therefore, having this kind of data, it shows you what you need to be able to do.
I'm going to have to get you to teach a class on how to get offers accepted for real, because I've never seen anyone have such a high batting percentage when it comes to looking at properties and getting offers accepted. Like, it's really, really impressive how quickly you're getting people in escrow. And with a little bit of a challenge, a lot of these are VA offers. So, you know, the listing agents don't necessarily, you know, put those to the top of the pile all the time. So you've got to be doing something in there.
I mean, it's PFM, man. The military, pure freaking magic. I don't want to say the F word. PFM. You know, not while we're live on Facebook. Somebody might have a kid sitting on their lap and be like, I'm never using those guys. They cuss too much. But no, it's strategy. Like you really have to make the listing agent like you and get them to trust you and know that your clients are well qualified, and have them give you the info that they normally wouldn't give someone else. Hey, what's the magic number? What's it take to get it done? What'll make me win? What'll make your seller happy? Those are key things. And a lot of agents out there are like, well, you know what? I just want to get them the best deal. Well, guess what? Right now, the best deals getting a house that you're okay with, at the price you're okay with.
Yep.
So let's move on to the next slide.
Yeah.
3-year trend sold by price. Okay. So if you're looking at it now, if you look at the 500,000 to 600,000, we have a little bit of a jump, right, in 2020 compared to 2019. But down below at 400 to 500, we dropped. What does that mean? Why are we dropping? Well, we're dropping because there's less houses on the market at that price point, right? So
I have a theory on that too.
Huh?
I have a theory on that as well, because a lot of the areas where might have fallen into the 400 to 500 range, call it Spring Valley, Lemon Grove, some of the different areas in there, they've moved up into the next price bracket.
Yeah, a lot of those $400,000 to $500,000 deals are now condos.
True.
Right, a lot of them are condos. So we lost some due to the fact that we have less properties on the market, as well as equity driving the price up. So as you can see, we're still selling a good amount of homes in every price bracket. The problem is it's not being replaced by the inventory. The inventory is just not coming back. So we're selling the homes. Buyers are out there. There's just not a lot of property to go back onto the market. So that's crushing the opinion of people that are saying, oh, the market's going to crash. Well, how's it going to crash when there are not enough homes to buy? Right? Yeah. There has to be a lot of homes on the market for the market to crash. And we're just not
forget
seeing
about that. Because when we actually crashed 12 years ago, the biggest issue was we had an insane amount of inventory. I remember talking to agents who were like, I have 15 listings. I can't find a buyer.
Yeah.
That's the recipe for a market crash. What you're showing me here is kind of the opposite. This is more of a recipe for prices to go higher.
Right. And I had a conversation yesterday with a buyer who'd been talking to an investor. So he knew everything, right? And it was entertaining because, people are being fed information and opinions that are not accurate. Let's call it fake news, right?
Okay.
And this data right here shows you, we're at 63% of our listings sold in 2020. What is that? And we're not getting the inventory back. So what's that say for buyers? Guess what? You have to compete, right?
Yeah.
Check out the next one. All right. So this is a different kind of graph showing you the price sold. So the year is 18 is in blue, 19 is in yellow, and red is 2020. So if you're looking at 500,000 to 600,000, you can see the graph. Like every price point, dang near, except for the lower end, has been more in 2020. The low end, you can see that it was more in 18.
Wow.
See that? So in 2018, we had more homes sell below $500,000, right? But anything above 600,000, 2020 has been crushing it.
Man, that's interesting. It's also true that people who bought houses in 2018 have made money on their investment in real estate for sure. And this is kind of shows you that in sort of a backdoor kind of way. That, hey, we couldn't possibly have had 1,345 sales in this price point. Now, there probably weren't even that many total available. So what you see there is this is what happens when prices appreciate. What's crazy to me is that we've got such good numbers here. I mean, it makes sense though as to why the inventory has been eaten away. I mean, we're plucking all of the apples off the tree, and the tree just can't grow them quick enough.
Well, with rates being so low, Derrick, I mean, and you see this on a daily basis, right?
Oh, yeah.
Rates are so low that buyers are jumping at the opportunity right now because they're getting a deal on the loan, right? So they don't really necessarily need the best price on the home because they're paying, 1.5 less percentage rate than they were 2 years ago. you know, so it's basically the same thing. Now let's go down to this. Check this out. Here's the listings, right? So homes listed, right? Not sold, not under contract, just homes that were listed.
Okay.
So if we go 500,000 to 600,000, we're only at 1,847, right? Compared to last year of 2,214, right? And 500 to, I'd say 650 is the real sweet spot for like the VA.
Agreed.
Right? So that's where they're at right now. So there's a lot of less homes being sold, even offered to be sold. And if we jump up the next price bracket, 600 to 700, you're another 200 less, right? And if you jump down 400 to 500, look at that difference. You're at 400 and what, 20 something, 420 less?
520.
500, yeah, sorry, 520 less?
522, yeah.
Yeah.
That's dramatic. If you think about like when you pull up your search on, you know, your Zillow, your Redfin or whatever, and you pull up the big map and all the houses populate on there, imagine wiping off 500 of those in that one price.
Yeah.
That's what we're talking about.
Yeah. And it's insane. Insane. And so many agents don't have this data, right? They're not even looking it up. You know, they're out here going, oh yeah, well, I can't find a house for my buyer. I wonder why, right? They're not there. You know, the homes just aren't there. Now look at this list compared to sold price in 2020, right? So at 1.5 million, we have 40% absorption, right? We're looking at, for most of our business, right, in between 500 to 700 and 800,000. We have 59% absorption, 65% absorption, and 68.97% absorption. So sold versus listed, which means all those properties, so from the 500, 600,000 range, 600 of those homes were listed and did not sell.
Gotcha.
Right.
And is that ever really an indicator of anything? Do you get anything from that as far as like a takeaway? Like, because there's always tire kicker sellers out there and stuff like that. I don't know what to make of these houses that get listed and don't sell.
What I take from it is their agent priced it wrong. Because if you're looking at how rapidly the houses are going off the market and, you know, how many multiple offers there are, the agent either marketed it wrong or it's, you know, they didn't leave it on the market long enough. Now, right now, and we can go down, let's see. Okay, here's 19s. So 19 at 500,000, we had 50.9. So at 20 at 500,000, we were at 68.
Wow.
Right? So
Huge.
that just see the difference. So in 2018 at 600 to 700, we did 50.41, 65.73. So that means now we're selling that much more of what's on the market. Right? So that's a 20%, 601 to 65 to 50. So it's a 15% change.
That would that would lead you to believe there's actually, you know, that buyers have less options, are being less picky, and again points to a hotter market than it does to anything else.
Exactly. And that's what it is here in San Diego. The market is on fire.
You're on fire. I know that for sure. This guy's crushing this Corona craze. I tell you, I'm
gonna get jealous, man. Don't talk about that. I'm getting haters, man. Let's keep the haters out of this. But this is the kind of information I like to have when I go to talk to my buyers or potential sellers and just be like, look, hey guys, you know, as a buyer, you're going to come in strong, set the expectation up front, let them know that, hey, this is what they're going to have to do. You know, and for a seller, hey, guess what? You're going to sell your house, right? So check this out, detached and attached, right? This is how many new listings we have month by month, going back to 2010.
Look at the cycles there. Look at that.
So December is always the low point of new listings, right? So when buyers say, hey, let's wait till after the holidays, okay, cool. Well, there's not gonna be a lot of houses in the market until like February. So your choices are limited, right? But look at this right here, March. Now we should be, if we go back to the year before, we should just keep going up, right? But right here, December, we dropped, and March is starting to go up, but we're not shooting up like the past Marches, right? See that? All these data points are in March. Right now, we're at 2,379, right? Last year, oh, sorry, that's 19, 18, March, boom, 3,040. Year before that, 3193. Year before that, 3252. Year before that, 3236. So as you can see, it's always right around 3,000.
So
right?
We need 700 people to decide to sell their home right now and get it on the market just
Correct.
to be where we are sort of historically at this time frame.
Correct. We're short about 600 and some change listings right now, March to March.
That's a crazy amount. That's a crazy amount.
Yeah.
I mean, just from you can kind of see what's really cool about this is you can see the cyclical nature of, how this stuff rolls in and rolls out. And you can also see the trend there the last couple of years. The formations are pretty solid across the board. You kind of see that little double top. It's there for all of them. Last year, we didn't have it. Spiked up straight and then straight down. You got the pointy. And it looks like this time, this thing's just going to collapse. I don't know where the inventory is going to come from. I hope we get some post-corona inventory. We could use it. A lot of people saying there's floods of homes that are going to come on the market and it's just going to, crush the market. I don't know if there are enough people who have a good reason to sell. That's the problem. You got to remember, either you're leaving the state of California or what are you doing? You're selling and buying.
Downsizing. Yeah.
Yeah. So you're selling and buying. So you're equalizing the market. We need those move up and move down buyers. They're very, very important for the marketplace. I don't know if we're going to see a real big California exodus or anything like that based on what's going on. That'd be the only thing, because it's not going to be foreclosures, at least not for a long time. If it is, that's for sure.
Yeah. So look at this. This is active listings, detached and attached.
Look at the trend on that.
Right. Our inventory has been going down, down, down ever since about 2011, right? 2012. Like, it's been on a steady decline, which tells me, and this is what this tells me, prices. So when people sell, they have to go somewhere. So like you said, they're either upsizing, downsizing, or leaving the state of California. The problem is so many sellers, they can't afford to buy anything else, right? They can't afford it. They bought their house in 1990, right? And now they're trying to sell it and they can't because, their payment's only $1,400 a month. And to buy something smaller, they're looking at $2,500 a month. They might as well stay in the big house.
Yeah.
Right.
I see that a lot.
Here's pending listings, man. Check this out. So in March, this year, we're at 1693. Last year, we're at 21. See, it's all over 2,000. All the way back to 2010.
Wow.
Now we're at 1,639. Reason being, there's not enough houses to sell. We have so many buyers that are active on the market now for over a month, where before we were able to get them into escrow within a couple weeks. Now they're not able to because the inventory isn't there and it's coming off the market too fast for us to keep up.
See it happen. I have several buyers pre-approved that are finding that same situation. In fact, one guy emailed me this morning and he said, all right, here's the deal. We have to get a house. So we're going to just pick whichever one we like of what's available by Tuesday or whatever it was. And I was like, wow, okay. That's the market we're in. Where, it's kind of like, all right. So to think that we could get from there to crash, anytime soon. I mean, we would need something colossal to change here. Something would have to.
We would need probably
change.
1,500 new homes to hit the market instantaneously.
Yeah.
Right.
Overnight, tonight.
Yeah. Today or tomorrow. Tomorrow will be better than today. Because if there's 1,500 of them, I don't have 1,500 of them. I only got like 6, so I need to get more. But look at this, sold listings. So we're not that far off from listings being sold year by year. So last year we were at 1,773. This year it's 1,728 on, and the yellow bar, of course, is detached. The blue bar is attached condoms, right? So we're very close within the trend as far as where we should be. We were, you know, we're 50 away from where we were earlier, but the inventory is lacking.
That is a really interesting stat when you combine that with what we just saw.
Yeah. And
But
check out the sales prices. Our median sales price is $680,000.
Look at that graph. That is as pretty as it gets right there.
So if you're
steady growth.
If you're talking about, oh, it's going to crash. Well, how? There's not enough to sell in the market. The demand is still there. So people are driving the price up. The market determines our value, not the buyer, not the seller. And here's our average, brother. Check this out. $908,682 is our average sales price in San Diego.
No way.
Yes.
What?
Yep.
Holy smokes.
So I will say that it jumped up from 853, which was a couple months ago, due to a few very expensive homes selling. So anything that sold over $10 million is really going to affect this. So like Alicia Keys' house, she just bought it for $20 million right there in La Jolla, right?
Yeah.
So a few of those high-end homes are affecting this. And I won't say who, but I know a realtor here in San Diego just listed $105 million listing. So you hit 105 million, that's going to affect this chart, right? So it's just crazy, man. But if you looked at the detached and attached, we're just climbing. It's just going up steady.
You know, it's funny because and you mentioned that just there, I really like to look when we look at these medians and average sales prices. I like to look at the attached for trend purposes, because of what you just mentioned. Like, you don't have $10 million attached houses, you know. No. You have a few condos that are going to go for $1 million or, you know, and change maybe here and there. But for the most part, you know, that's where you're getting, you know, entry level, what you're looking at entry level wise. If entry level is on the move, and you can see here by the graph, both of these graphs, this is a great looking graph. I mean, this just looks like a market that wants to go higher. It's not doing it in a crazy way. It's not shooting up out of nowhere and there's this big cliff. It's nice and steady, Eddie, on its way up. And to see that on the attached there, that really gives you a picture of how stable it is and how smooth that growth line is. That's a great looking graph.
Yeah, I mean, this is San Diego, man. People don't understand. And here you go. It's just, boom. We're at 10 days on market now.
That's what we're at right now?
Yeah, 10 days.
That's the average
DOM
right now?
Yeah. Wow. Here's our month supply. 1.8 month supply of attached, 1.6 month supply of detached.
That's indicating an extremely strong seller's market right there.
Right. So if you look at it, it's been across the board since December. Like, it hasn't changed. So even with coronavirus happening, this was already going on.
Yeah, I wonder what the time frame will be for us to get an understanding and a grip on the ripple effect, and how, you know, what will it be there? Will forbearances have an impact on this and things like that? I mean, I don't know if we live in a bubble or what. What I see, the market's on fire, and I don't know. These are countywide stats, so these take into, you know, account a lot of different things. I just wonder how long will we need to, you know, we should set a date and time and say we're going to revisit this. We'll bring this chart back. And I think that would be a slam dunk situation.
We get this chart every month. So I can look at this monthly with you if you'd like.
I think we should.
You know, and look at this average list price compared to sales price. Right now we're at 99% across the board.
Man.
So normally, what my title rep pulled my stats one day, and he was like, "Jay, man, you're crushing it." I was like, "What do you mean?" What do you mean? He's like, "Well, the MLS is at 96% list to sell price, right? You're at 100." You know, and I was like, "Oh, okay, cool." And he was like, "You know, average time on market, 28 days, you're at 16." I was like, "Okay, great." You know, and he just pulled all the averages and was like, "Dude, it's insane." He's like, "There's only like one other person that's doing what you're doing right now." I was like, "Oh man, I appreciate that." I don't look at that kind of stuff normally, but then when I see stuff like this, it makes me realize that not everybody gets their list price, right? And I should know that because I work with a lot of buyers, but I don't think about it when I'm listing a home. So 99%. So if you list your house, right, for $1 million, you're going to get $999,000 for it, right? And that's usually not what happens because most people overprice their homes.
Yeah.
Right.
Yeah, especially in a market that's been going up. I mean, you have to look at context there too, because sellers, when you're meeting with a seller right now, they're thinking about them. The market's on fire. I should be able to get some crazy number. And so you have to factor that into this too. I mean, to get 99% in this climate, that really says something.
So this chart is a little bit different. So they added the pending absorption rate. Okay. So pending basically means anything that's in pending right now that hasn't actually closed. So, March of 2020, March 20 to 27th, we had 587 new listings and 373 went pending. We had a 97% absorption rate and 572 transacted, actually closed, with another 63% in pending status. That means under contract.
That's crazy.
Right? So
that's absolutely nuts.
There's just no homes left after that.
Yeah.
There's none. Sorry. There's like, if you look down below, look at 2019, our absorption rate was 80%. Right.
And that's still really good.
Yeah. I mean, but we had a lot more listings.
True.
We had 752 new listings during the same time frame compared to 587.
And that's a 1 week period you're looking at there. So that's 170, 165 listings, difference in a 1 week period, year over year.
A week. So if you go to March 28th to April 3rd, last year, 833, this year, 473.
Oh my goodness.
Right. And if you go down to April 4th to April 10th, last year, 954, this year, 363. So we're slowing down, bringing listings to the market, but our buyers are still just as hungry, causing a very high absorption rate. Look at that, 84.3% pending and 88.15 actually absorbed during the same time frame, compared to 55.7 and 63.2.
That's crazy,
right? Like
that's recent data, right?
This is right now. Like this is within 2 weeks ago.
Yeah,
right?
That's like a couple weeks ago.
We're at this point right now in this market that, the way it's still going to keep going, like we're going to be out of houses to actually sell. We're going to have buyers sitting there for months waiting for a house to come on the market, and they're just all going to have to bid on it. It's going to be like an auction. We'll have to get an auctioneer out there. I'm not going to try to do it. I really wanted to. I'm going to go, blah, 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 but I can't do it.
Get into 575.
Yeah. All right, check this out. Monthly indicators. Okay, we're negative 3.3% 1 year change in closed sales on all properties. We're positive 6.9% 1 year change in sales price on all properties, and minus 32.5% 1 year change in homes for sale, all properties. So we're at negative 32.5% of homes compared to last year right now.
Which means we could almost double where we're at, and we would just barely be above when you factor that out.
Yep.
So and that's what I mean. I don't know where that inventory is going to come from. I hope it comes. I hope we see a lot of homes come on the market here once we're through this quarantine situation. We need it.
Yeah, ours definitely need it. And here's this housing supply review for March 2020. Price range with strongest pending sales is 1 million to 1.25 at 13.4%. Home size with strongest pending sales, 2,000 to 3,000 square feet. And property type with strongest pending sales is condos and townhomes, is up 4.8%. So market-wide inventory levels are down 32.5%. The property type with the smallest decline was the condos. Townhome segment, and when they decreased to 22.6%, that amounts to 1.5 months supply for single-family homes and 1.7 for condos.
Nothing.
There's nothing there. Nothing there.
And we're actually getting some new inventory in the condo townhome space. That's where we're actually getting a lot of the new home inventory that we're getting, which we're not getting very much, but of what we're getting, it's mostly in that space.
So, I mean, this slide basically lets you know supply and demand. We have a low inventory, so sold prices are higher. I mean, that's that graphic. So, questions to ask and numbers to watch. What does it mean when a market is shifting? Is it shifting from a buyer's market to a seller's market? Is it a balanced market? It's definitely a shift, but it's not the kind of shift that we're used to. The people that went through the last shift saw it switch from a seller's market to a buyer's market overnight with a ton of foreclosures. Will we see some foreclosures after this? Possibly, but I think the Fed is doing a lot to prevent that. Giving 0% loans to banks, and banks have low interest rates. They're doing forbearance and deferments. I mean, there's just a lot of things going on right here. So check this out. 4.5% of American adults buy or sell every year. The average American knows 4 people a year who wants to buy or sell. A solid Met database of 100 people can yield 5 sales from actually Mets and 400 possible referrals. At a 5% conversion of 400 referrals, you would close 20 transactions from referrals. 25 just from your database.
Wow.
So I mean, that's the stuff I wanted to share with everybody out there on the market. There is a lot of people out there with bad information. A lot of investors think they're savvy and been doing this a long time, and they may know what to do when the price changes, but they're not seeing this right now because they're not looking to buy homes for them to live in. They're looking for flips. They're looking for rentals. They're looking where they can come in low and buy low and sell high or whatnot. The data doesn't show that this is happening. It's not going to crash. It's doing the exact opposite. We're going to an extremely crazy seller's market because there's not enough homes on the market. And Derrick, I honestly don't know what to do with that. Like right now, our buyers are trying to find homes. They're bidding on them. Some are winning, some are not. I mean, I'm winning. But like so many people out there are not, and it's a struggle for them, and I feel bad for them because they want to have a home, and what can we do to help them do that is just come with the strongest package possible.
Do everything I can, try to reach out to the listing agent and let them know how strong we are. We pre-underwrite files. We want to look at everyone's income and all that stuff up front, make sure everybody knows what's going on. Try to let people know that I'm available. Just do whatever I can to get an edge because, it is competitive, and every single day, we miss out on an offer somewhere.
Oh, yeah.
We get the bad news on somebody every single day. And so that's what I'm seeing. So I'm sitting here going, when people are talking about the market crash, do I live in a bubble? Or, I'm glad we got to look at the numbers because it's all just hyperbole and hypothesized information up until you actually look at the data. And that was very, very recent data as well, including timeframes within the quarantine situation. So it'll be interesting to see how that continues to play out. But we need sellers. I mean, plain simple. So if we get some, I think that'd be a good thing, not a bad thing.
Yeah. I mean, we need the sellers. There's, hey, if you're out there right now and you're seeing this, you're watching this, please give me a call, right? 0202-751 is the DRE. I'll slide that in there. So, for compliance. We just need people that are looking to downsize, upsize, move out of state, willing to put their home on the market and help another family buy it so they can move in. And in today's market, you're going to get the most money possible. That's just, there's no other way to look at it besides that, because the market supports it. You're just going to have a major bidding war, and it's going to be crazy for you.
It's going to be crazy. And you can dictate terms too. If you want to be in the house until you find something or whatever, I mean, there's a lot of things, on the buy side, you have to be willing to make some concessions sometimes on, hey, okay, well, we got to do it on their time frame, or hey, we got to do it this way. We're going to close here, and then we're going to do, they're going to do a rent back, or you got to just be willing to do some of those things. And it's great if you're the seller because you get to dictate all those terms. So
yeah, it is great for them. But the cool part is the buyer gets a house.
Yep.
They're not one of the other people out there sitting there on the street trying to figure out how they're going to buy their next home. And we usually structure our deals in a way that's favorable to both parties, to where it's a win-win for everyone. So where our buyers feel happy, the sellers are happy, and then everyone will just go and get the deal done. So yeah, man, I mean, that's what the data says.
That's what the data says. That's what's going on. That's what I'm seeing. That's what I'm feeling. I'm glad to know that I'm not in a bubble and that, what I'm seeing in this marketplace is for real. I think that there's always opportunities in every marketplace and they're always different in some way. This is probably the perfect market to move down by, to sell and buy and move down in. You should really take a look at taking advantage of that. I know the difficult part about that a lot of times is tax-based for people,
Right.
trying to do the tax-based thing. Can you transfer your tax base? There are some propositions available where something like that can be possible, but in certain cases, if you're not old enough, you can't quite do it. And so there's there's some situations where it's like, oh man, so we got to wait 8 years before we can do that. But if you're looking to move down, this is the perfect market to do it in. You might be able to have your cake and eat it too. It's hard to say, but usually you want to move down an up market, move up in a down market. So that's where we're at. And for people who are looking to get into the market, it's always a good time to look, because you never know what you're going to see. And that's the thing that, even though we may be short on homes, even though we're winning. So when we win, the home buyer wins big,
Right.
Especially right now. So we're trying to win. We're competitive. We want to go out and win in this market for you. So if we have that opportunity, we'll set you up for success. And that's what it really boils down to, is creating opportunities for people to have success. Jay and I will both fight for everybody. I mean, we will go down swinging if we go down. There is no, I don't know a nice way to say this. There's no messing around.
I don't lose fights, bro. I'm kind of thick, bro. I can take a hit. I don't lose fights.
We're battling out there every day, but winning a lot, so it's definitely one of those circumstances where you have a unique situation going on kind of across the board. But what the data is telling us is that we're a long ways away. We're very far distance away from a crash that, some people may be talking about. A lot of things would have to drastically change before we can get to that point. And it looks like they opened up the parks today. See that?
Some of them, yeah.
Some of the parks got opened up today.
There's a list. You can find it on the San Diego website, and it has which parks and things are open back up.
Yeah. So you're going to start to see the trickle, right? They can't do it all at once. Everything's going to be a trickle. They're going to trickle this. They're going to trickle the parks. They're going to trickle that. And then before you know it, sports will be on TV, and then there'll be people in the ball stadiums, and then we'll be back to normal. So we're headed in the right direction here to get out of this thing. So I think we can all see that writing is on the wall. That COVID sucks. There's no doubt about it. But it isn't the bubonic plague.
What's that? Help me! I need out of my house.
It's coming, brother. I know this. We have a couple friends that are single moms, and they have it tough enough, as it is. And then that to not have school's a big help when you're a single parent.
Bro, I want to buy like every teacher at my kid's school present. Like, I always appreciated teachers because they're teaching the next generation, the leaders of our world, right? Now, take them away from me for like 6 to 8 hours a day, please. Like, I love my kids, man. But I can't even go to the office right now. So, beautiful San Diego behind me, that's my office.
Yep. That's where we're at. Oh,
yeah.
Sorry about that. That's where we're at. That's the situation. It's getting better. We're trending in the right direction. We have a super strong real estate market. And the main thing that I've been looking at, obviously, as the finance guy, has just been keeping a close eye on the mortgage situation. How liquid are we? Are things tightening up? Sure. Are post-closing departments getting tighter and creating new forms and doing multiple verifications of employment? And they're all trying to cover these different bases for the secondary investors. Yeah, there's a lot more stuff last second for fundings and things like that have to happen. And you just have to hustle around that. That's the way it's going to be. But if we look at interest rates, there is some disparity between, the conforming balance under 510, 400 VA rates versus the over 510, 400 VA rates, almost a full percentage point right now, which I've never seen before. There's just a little bit lack of appetite for those higher balance loans across the board. Non-QM jumbo is gone. And a lot of that has to do with just risk diversification. No one really knows what's going to happen here. Are there going to be foreclosures from all these forbearances and all these layoffs and unemployment? Are we going to have that? And so that's getting priced into the market a little bit. But
I mean, I kind of hope there is. So
money is still there. It's just flowing into the conforming balance bonds, and we're getting killer rates there. We're getting people 2.75. We locked several of those this week and last week with credits toward closing costs at 2.75. So the money's still there. It's just in that place. So you got to know where to look.
Yep. Well, all right, brother, man. I'm gonna let you go. It's time to call it. I know you got another call right after this. So
Yes,
so let's wrap it. Thank you everybody for checking in with us today. I mean, me and Derrick, take pride in helping y'all. So y'all have a good one. I'm signing off.
appreciate you, brother. See ya.
You too, brother.